I've been looking forward to this next segment of Blind Justice about tax-free savings account, a topic I've been meaning to learn more about.
Well, when it comes to investing, the key is to get advice from someone who's knowledgeable and trustworthy.
Fortunately for Edmonton's Wade Brown, he has a childhood friend who can help him out when he has questions.
That's convenient, isn't it?
Wade sat down with his friend Ryan Christianson, a consultant with the Investors Group, to learn more about TFSAs.
Blind Justice with Wade Brown. Financial planning, the TFSA.
So TFSA is a tax-free savings account. Basically, it's been around since 2009. It's probably my personal favorite. Basically, the way it works is you have to be a Canadian citizen, 18 years old, have a valid SIN number, and any money you put in there, as long as you do have those requirements, basically any investment growth is tax-free, so when you take it out, you don't pay taxes like you normally would.
So how does a tax-free savings account compare with a regular savings account?
So being in the industry, that actually, I feel like it's misnamed. I think it's most powerful as an investment account rather than the savings account, where you're investing in long-term funds. You get the most growth and the most benefit from the fact that it is tax-free. You know, if you take it and actually invest it in mutual funds or stock market, the tax savings you'll get is much higher than if you use it as a savings account. And a regular savings account, like your savings and checking account, those are non-registered, so you actually are supposed to pay tax on any interest that you gain in those accounts.
How does someone go about opening a tax-free savings account?
As long as you're 18 years old, have a valid SIN number, and are a Canadian resident, you can open one anywhere that offers it. They're offered at all major banks. As long as you meet those eligibility requirements, you can go and open one.
Do TFSAs have any limitations?
So the limitations of a tax-free savings account are just the contribution limit. So in 2009, if you were 18, you can contribute the full maximum amount, which right now is $52,000. If you turned 18 later than that, you'd be eligible for every year after you turned 18, and including the year you turned 18.
Perfect.
TFSAs are really a smart thing to have. If you haven't already taken advantage of them, I would strongly recommend that you take Ryan's advice and open an account.
Well, after last week's Blind Justice segment on RDSPs, I called my financial advisor, and TFSAs was one of the first things that he recommended.
So did you take his advice?
I did. The only
Good.
problem is now I got to find the money to put into the account.
Well, Anthony, like most things in life, it's better to start late than never. But don't forget, you can always take full advantage of the account no matter when you start. Unused contributions can be carried forward.